$2 trillion gone, vanished. Not in a week, not in a month, in one fucking afternoon. The S&P 500 was sitting at an all-time high 3 days ago. Record books, confetti, champagne. And the jobs report dropped, and the whole market said, nah, we good, and flushed itself down the fucking toilet. Meanwhile, Bitcoin is getting absolutely demolished, down 53% from its peak, October 2025. Crypto portfolio is looking like a crime scene right now, you dig? And the wildest part, the reason the market crashed, well, it was because the economy is doing too well. Yeah, you heard that right. So let me break it down for you. What's good, everybody? Welcome back to the Bag Brigade. It's your boy Chuck Boomberg, live and direct once again. If you're new here, well, this is where we break down what's really happening in the markets. No fluff, no filter, just real talk and real fucking data. Today I'm breaking down exactly why the market just had its worst day since April of 2025. I went through all the data, fact checked every number, and I got my own takes on it for all of it. So let's get into it, right? Strap in, because this one's fucking heavy. Here's where it gets crazy. On June 2nd, literally 3 days before Friday's crash, the S&P 500 closed at 77,609. That's an all-time high. The 24th record high of the year. You dig? 24. We were running up like we couldn't be stopped. AI stocks going crazy, right? Chip makers on fire. Marvel up 33% in a single day. It's a fucking party. And then June 5th happened. The Bureau of Labor Statistics, the BLS, dropped the May jobs report. 172,000 jobs added. Economists were expecting 88,000. So we doubled the expectations. Third strongest jobs report in about a year and a half. Now, if you're new to this game, you might be thinking, wait a minute, Chuck. More jobs is good, right? It's a good thing. And you'd be right. In a normal world, that is good. But we don't live in a normal world right now, do we? We live in a world where good news for Main Street is bad news for Wall Street. I'm about to explain exactly why. The S&P 500 drops 2.6%. The NASDAQ gets absolutely fucking cooked, down 4.18%. That's the worst day for the NASDAQ since April 2025, when the tariff situation had everybody panicking. Nvidia, down 6.4%. Broadcom, getting hammered. The semiconductor index alone lost $1 trillion in market cap. So look at this heat map I got right here. Red everywhere, right? Every sector, every name. Nvidia, Apple, even though Apple performed much better than most. Google, Microsoft, right? Meta, Amazon, all of them bleeding out. Micron down almost 13%. Intel down 11%. Oracle down almost 11%. This wasn't a fucking dip. This was a statement. You dig? Now, of course, whenever something big happens in the market, you already know that old Trumpy Dumpy got to weigh in, right? And sure enough, at 10:33 a.m. Eastern Time, True Social, well, here comes Trump. This is what he said. Quote, with a great jobs report, like just announced, stocks should go up, not down. That's the way it was for 200 years. Growth does not mean inflation. How else can a country attain greatness? President DJT. Now, look, I get what he's saying. On the surface, it makes sense. You dig? I hope so. Economy adding jobs, stocks should be happy, right? That's how it worked for decades. But here's the thing, and this is where a lot of people get confused. We are not in a normal rate environment. The game has changed. And let me tell you exactly when it changed and why. This right here, this is where it gets fucking real. This is the most important part of the whole video, if you ask me. If you understand this, then you understand everything else. September 17th, 2025. The Fed makes its first rate cut of the year. They bring down, or they bring rates down, right? A quarter point, 0.25%, or 25 basis points. And everybody's celebrating, right? Yeah, right. Oh, rates are coming down. The economy's getting better. Inflation's under control. Except inflation was not under control. The Fed's 2% target, right? Well, they never hit it. Not in 2025. Not even close. Their own projections don't see 2% until 2028, apparently. That's 2028, if you don't know how to do anything on a calendar. So why did they cut? Why did they cut? Well, right here, in their own words, downside risk to employment have risen. They cut because the labor market was getting weak, not because inflation was beaten. The labor market was softening, and they got fucking nervous. That's the whole reason. Now, here's my take on this, and this is important. The Fed basically told us we're cutting rates because people are losing jobs and the economy might be slowing down. They were scared. They saw cracks in employment and they fucking reacted. Fast forward to today, or yesterday, I guess, June 5th, 2026. The labor market just showed up with a $172,000 job print that nobody expected. Job openings are surging. The whole reason they cut rates in the first place. That reason just evaporated. Pew! Fucking gone. So now the market is doing the math real quick. Wait, if the Fed cut because of weak jobs and now jobs are strong and inflation is still above target, then why would they cut again? They might actually have to raise. And that is why stocks crashed on a good jobs report. The market isn't celebrating strong employment. The market is terrified that strong employment means the Fed is done cutting and might start hiking. It's actually more likely, in my opinion, that they start hiking now. Not now, but they probably will keep it paused where they're at and then raise probably sometime this year towards the end. That's my guess here. Just let that sink in for a second, okay? You dig? Now, Let's talk about the elephant in the room that nobody wants to talk about. Inflation. CPI, Consumer Price Index, is at 3.8%. 3.8%. I need you to understand how we got here, because it's not just about groceries being expensive. The Iran war changed everything. When the conflict kicked off at the end of February 2026, Tehran shut down the Strait of Hormuz, as we all know. For those who don't know, about a fifth, 20% of the world's oil and natural gas flows through that strait. Okay, you shut that down, energy prices go to the roof. Gas is over $4 a gallon average right now in the United States. And when energy goes up, come on, everything goes the fuck up with it, because everything needs energy to produce and ship. Now, look at this chart, okay? This is CPI inflation overlaid, right? The white line is 1967 to 1983. The blue line is 2015 to the present. And the question mark at the end, that's the question everybody's asking right now. Are we about to repeat the 1970s? Because in the 1970s, inflation came down. Everybody thought it was over, and then it ripped back up to double fucking digits. We're sitting at 3.8% right now, with a war driving energy prices up like you wouldn't believe, and a job market that just showed it's way hotter than anyone possibly thought. That is not a recipe for inflation coming down at all. That is a recipe for inflation getting worse. And this is where my take gets a little fucking spicy, okay? I think the bond market was living in fantasy land, or is still to right now. They were holding on to rate cut hopes, and I guess because the labor market looked weak, the jobs report just shattered that illusion, that's for sure. Reality check delivered. Express shipping with no fucking returns. And it wasn't just the jobs report, okay? See, earlier in the week, the JOLTS data dropped, and it was absolutely fucking wild. Job openings surged by 731,000 in April. The consistent estimate? Basically flat. Nobody, and I mean fucking nobody, saw this coming. This was a 9 sigma beat. For the non-stats people, a 9 sigma event is something that's supposed to happen basically never. You dig? Like once in the history of the universe type of fucking never, okay? That's how far off expectations were. Available employment hit 7.6 million, the highest since November of 2024. And for the first time since last June, a year ago, there are more job openings than job seekers. So you've got the jobs report saying economy is fucking strong, and the jolt saying economy is really fucking strong, and inflation saying I'm still here, I'm not going anywhere. You dig? That's the triple threat nobody wanted. That's the combo that broke the market's back, at least in the short term. Now, this is the part where things get real uncomfortable if you're a bull in this market. Look at this CME FedWatch data. Just a few months ago, the market was pricing in up to 4 rate cuts in 2026. 4. People were out here planning their portfolio around cheap money's coming back. The age of easy money, right? Now, the base case, the most likely scenario, is 2 rate hikes by early 2027, if not before. No cuts. Hikes. We went from the Fed is going to make money cheap again Dude, the Fed might make money more expensive in a matter of weeks. And there's even a 17% chance of 3 rate hikes by April of 2027. 1 in 6 odds that rates go up 3 times. Think about what that actually fucking means. Higher mortgage rates, higher borrowing cost, more expensive car loans, credit cards, business loans, fucking everything. The cost of money goes up and the whole economy is going to feel it. This is the most hawkish shift in Fed expectations since the post-pandemic fucking stimulus era. That is not a small statement. We are talking about a complete fucking reversal in market sentiment. My take, I think the market got way ahead of itself. That it's obvious. I, I think anybody can see that. Everybody was so focused on this fucking AI rally and record highs that we forgot that we still have a real inflation problem or a stagflation problem, which is even worse. If you don't know what stagflation is, well, it's a toxic cocktail. It's basically a shrinking or stagnant economy with inflation on the rise. It's the worst of both worlds. You dig? It's the truth. The data just reminded everyone, and reminders like this, yeah, they fucking hurt. I feel ya. Now, let's talk about the other side of this, crypto. And I'm not going to sugarcoat this at all. It's fucking ugly out there. Bitcoin hit its all-time high of about $126,000 per token or coin back in October of 2025. It was about 9 months ago-ish, something like that. Maybe 10, whatever. ETFs, exchange traded funds, were flowing in. Institutions were buying. Everybody was talking about $200,000 Bitcoin by the end of 2026 or 2025, whatever. It doesn't even matter at this point. Uptober, they called it. We're like down fucking Tober. Jesus. Today, Bitcoin's sitting around 59,000. That's a 53% decline from the peak. More than half of its value gone in 8 months. You can see it right here on the weekly chart. October 25 record high. Then the Iran war begins. Markets panic. Risk assets get sold. Bitcoin drops into the 60,000s and 70,000-ish areas. Then it tries to bounce, but gets back right up near $80,000 or whatever, which happens to be the 200-day moving average that it ticked up to, and then rejected it. And this is the week, right? Right? It's down fucking almost 20% in a single week. The total crypto market has lost roughly $2.5 trillion since October. That's not a fucking correction. That is a bear market full fucking stop. And here's what's driving it beyond the macro. There's been a record 13-day streak of outflows from spot Bitcoin ETFs. 4.4 billion pulled out in less than 2 weeks. Institutional money is rotating out. Okay? They're rotating out of crypto and into, well, we're about to talk about where it's going. My take on Bitcoin right now is that the narrative broke. Digital gold, right? Doesn't work when real rates are going up and the dollar is strengthening. Bitcoin is trading like a risk asset, not a safe haven. And in a risk off environment with rate hikes on the table, well, risk assets get fucking punished. That's exactly what's happening here. And now here's a piece of the puzzle that a lot of people are fucking sleeping on. And it might be the most important part of this video, to be honest with you. The Financial Times yesterday, Friday, June 5th, 2026, dropped a report that Meta is considering raising tens of billions of dollars through a stock offering to fund AI. When that headline hit, look at Meta's chart. Midday, straight down, fell from $612 a share to $586 a share in minutes. Closed the day around $592 a share. Why is this scary? Because it comes right after Google or Alphabet just did the same fucking thing. Alphabet announced an 85 billion equity raise. 85 billion with a B. Okay. Berkshire Hathaway put in $10 or $10 billion, I'm sorry, of that. Now, here's what equity raises means in plain English. These companies are printing new shares and selling them to raise cash. When you print more shares, every existing share is worth just a little bit less. That's called dilution. And we're not talking about small numbers here, not by any means whatsoever. We're talking about the largest equity raises in corporate fucking history. The question investors are asking right now, well, is this the beginning of a trend? Are all the big tech companies about to flood the market with new shares to fund their AI arms race? Because if Apple, Amazon, and Microsoft follow suit, that's a lot of new fucking supply hitting the market. And here's the thing that's got me thinking a little bit. These companies have been spending like fucking crazy on AI infrastructure. Alphabet's projected capex for 2026 is between 175 billion to like 195 billion. That's insane. They're building data centers like they're going out of fucking style. But the revenue from AI hasn't caught up to the spending yet, not even fucking close. So they need cash and they need it now, just like that commercial. It's my cash and I want it now. JG Entworth, whatever. That's a lot of fucking pressure on stock prices when you're already in a sell-off. You dig? And then there's SpaceX. The biggest IPO in the history of the stock market is days away. 75 billion. Look at the chart. Right? Saudi Aramco raised 29 billion in 2019. That was the record. SpaceX is going to raise more than double that. And well, it's not even close, right? Alibaba, SoftBank, Visa, all massive IPOs. SpaceX makes them look tiny. 555 million shares at $135 each. A valuation of 1.77 trillion with a T dollars in value. Only 6 companies in the entire S&P 500 are worth more. Now, here's what people aren't connecting. When an IPO this massive is coming, funds need to sell existing positions to free up cash to buy into it. You want a piece of SpaceX? You got to sell something else. Well, multiply that across every hedge fund, every pension fund, every institutional investor, private credit, whatever, who wants in. That's a lot of selling pressure on existing stocks. This is the part now where I want you to zoom out and see the full picture. See, you've got number one, a jobs report killing rate cut hopes. Number two, inflation at 3.8% and rising. Number three, the Fed potentially switching from cuts to hikes. Number four, Bitcoin and crypto and literally a free fall. Number five, big tech flooding the market with equity raises. And number six, the largest IPO in history about to vacuum up every bit of capital that it can. Every single one of these is bearish on its own. put them all together on the same week. That's why $2 trillion disappeared in the market in one afternoon. So, all right, let me give you my honest take on all of this because I think there's a bigger story here that most people aren't fully spelling out. The market ran up 20% in 2 months. 20 fucking percent. From the April lows to June 2nd's record high, it was a straight up fucking rocket ship. AI hype was driving up everything. Nvidia couldn't stop going up. Every earnings call mentioned AI at least 50 times. It felt fucking unstoppable. But the fundamentals underneath, they were shifting. Inflation was creeping back up because of the Iran conflict. The labor market was stronger than the data had been showing. And the Fed's entire rate cut cycle was built on the assumption that jobs were getting weaker. An assumption that just got blown the fuck up. This isn't just a one-day sell-off, in my opinion. This is the market recalibrating to a completely different reality. We went from soft landing, rate cuts, everything's going to be fine, to actually inflation might be accelerating. Rates might go up. And oh, by the way, here's 200 billion in equity raises and IPOs that need your fucking money. The game has changed. And if you're still positioned like nothing happened, well, you might want to rethink that. Now, I'm not saying run for the exits. Okay, that's not what I'm trying to say. I'm not saying sell everything and hide in a fucking bunker either. I'm saying pay attention. The data is talking. The Fed is watching. And the market just gave us a very loud, very expensive warning shot. Keep your eyes on the next CPI print. Watch what the Fed says at the June 16th or 17th meeting. And pay attention to how SpaceX's IPO affects liquidity in this market. Those three things are going to tell us whether this was a one-day shakeout or the beginning of something bigger. So if you got anything from this video, why don't you go ahead and just do those YouTube things. Like the video, subscribe to the channel, drop a comment. Love to hear what anybody's got to say about this. And if you want to get a little deeper on all this as well, why don't you try and join the Bad Brigade movement? Most of this takes place in our Discord community, and the link will be in the description of this video. It's also on the main YouTube page as well as our Twitter page. Also, you can go to thebadbrigade.com, which you should. Check out the Bloomberg dashboard that we created. It's basically a Bloomberg dashboard, but doesn't cost $2,000 a month and does almost exactly the same thing. Then there's a lot more to it, but you can join through there as well. Now, here's the deal. You have to fill out an application. The community, it's free. We don't charge, but you got to fill out that application, and either myself or one of the mods are going to review it, potentially interview you, or you're going to get approved or denied, and that's it. That's how it goes. There is no way around that, and that's just the way it is. So you're going to have to deal with that. But if you don't put an application in, you got no chance. So I'll leave it like I always leave it, guys. Come on. I don't ask why. I ask why not. Well, because why the fuck not, right? It's probably because, well, maybe because I made something out of nothing. So thanks for nothing. Another thing, is I no longer accept the things that I cannot change. Because these days, I change the things that I am no longer willing to accept. You dig? And to all the haters out there again who dropped comments or said this or that. I'm not going to go into details, but it doesn't matter. But to all the haters, and especially the fake Chucks out there on Discord, there's probably 250, 300 of them at this point. Just understand that there's only one Chuck, and you're looking at right here. That's me, baby. So before they cross me, they gonna have to nail me to it. You dig? I'm not playing. Anyways, that's all I got for this one, Bag Brigade. This was a big one, in my opinion. Drop a comment and tell me, are you buying the dip? Are you sitting on the sidelines? Because I want to hear about your plays. But anyways, until next time, stay sharp out there. Protect the bag. Boomberg out.